Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us now, she actually understands parabolic SAR. Katy Kaminski joins us, Chief Research Strategist, AlphaSimplex. I'm going nuts, Katy, with the doom and gloom, the market's cratering. It's not. It's not cratering. It's not even a correction, right?
That's correct. I mean, I think there's a lot of concern right now. I mean, look at today. We don't have any data. Normally today is a fun NFP day, but I think you have seen signals come back a little, but I mean, we've come so far. The trend is very strong.
So, Katy, let's talk about the equity business, the equity markets. I mean, I guess they, stalled a little bit, I guess is kind of maybe how some people would characterize it here. But in the absence of some economic data, their earnings have generally been very strong coming off of Wall Street here. What do you make of the equity business? Is this just kind of a pause here, or is this something a little bit more?
I mean, I think there's a little more concern. It's just generally a valuation question. I mean, when you have a trend that extends past a certain level, it really suggests that people start to get worried that, things may be overheated or have gone a little too far. And you don't really have the data to confirm if things aren't a problem. So I think that's really where people are starting to think, maybe I take profit is what I would guess. So I'm definitely saying we're not in a correction yet, but it definitely smells a little bit funny. Like it feels a little like there's some concern.
Did you notice this is like the MIT hour?
Yes.
We have Katy Kaminski and Troy Gayeski back to back.
Yep.
I mean, neither of them have ever laid eyes on Harvard.
No,
they just stopped at MIT and kept it there. So, Katy, you're in the Muddy Charles pub. I mean, this is what you do at MIT. You go to the Muddy Charles pub, and somebody says, is the market broken? The answer is it's not, right?
I mean, I'd say the market isn't necessarily broken. We don't have an indication to it. It definitely has extended. Right now, I don't think there's any sort of obvious signal, but you do see that hesitation in price moves, which starts to get you wondering if, maybe we have some sort of correction to kind of deal with this overextension.
Katy, how about the U.S. dollar here? I mean, we had as other risk assets were rebounding from the April lows and the April turmoil, the dollar did not. It stayed, down, 8, 9, 10%. It seems to, if nothing else, stabilized, maybe even moved up a little bit here. How do you think about the U.S. dollar here?
This is a really good question. Looking at trend signals right now, the one area where you're seeing some change and pivot in terms of conviction is you're seeing a little bit more support for a strong dollar. And I've seen that sort of evolving, especially over the last few weeks. So we'll see. I mean, of course, maybe this is also an indication that the market is concerned about whether or not we'll get rate cuts, and that is generally pro-dollar. But you're right, it has been the strongest theme. There's some pivot now, though.
What do trend followers do in a market like this? I mean, reminiscence of a stock operator, I think 1930, I can't remember the year. You step aside and just, go do what you do. Katy, what do you do if you're trend followers? Do you participate in the markets or just step away?
Well, I think we always participate in the markets, and it's particularly this particular environment because we're thinking about trends and them extending. When you think that trends might be changing, it can be very tricky because we need to measure that evidence that there's actually been a more prolonged change. Right. So I think for us, an extended drawdown is something very interesting to us. Just a little reversal is just sort of noise and perhaps irritation, I guess, in terms of our signals.
Katy Kaminski with us and Troy Gayeski. It's a Massachusetts Institute of Technology Hour. Good morning. 92.9 FM in Boston. I'm looking at a YouTube video of the Muddy Charles pub.
Yep.
I mean, it's the only pub in the world where most of the kids are in there. They're having their beverage of their choice.
Sure. But
they're studying thermodynamics while they do it.
They got their protractors out.
It's a very different school.
It is, absolutely. Hey, Katy, talk to us about gold. We just had a story about Steve Cohen maybe going to sell his gold toilet here, so it got us thinking about gold here. But boy, it had just an unbelievably strong move up this year. It's pulled back here a little bit. What's the trend in gold?
Well, the trend in gold has pulled back some, and I mean, maybe this is your top indicator, right?
Steve Cohen selling the gold toilet.
But you have seen some retraction in that trend. There's been noise, and it's been consolidating. So I would say that there is some evidence that the trend is dissipating.
This is brilliant. Thank you, Paul, for so much for bringing up gold. Can I go in full nerd now?
No, yet.
Okay, folks, you hear us talk about, Katie will do this, and I'll do it, and even Troy, log convexity.
Oh, boy.
So you take whatever you're looking at, you run to a log y-axis, and if it's a curve, that means you've got an accelerative tendency up or down, whichever way you're going. So I got log convexity, Katie, in gold. As a general rule, does log convexity signal you're too late to acquire and that the trade's already underway?
It is possible, because oftentimes trend signals can deteriorate as they become more convex. And you do see that sometimes in terms of, after you've seen the total extension of a trend, you might see that sort of deterioration. And that's very common in trend signals, that as they overextend, they can deteriorate.
Let's continue this nerd discussion. Katy Kaminski with us, AlphaSimplex. So then, Katie, if I'm bold enough to go into a log convex accelerative trade like Palantir or like gold, how do you set up a stop loss regime?
So that's actually quite tricky. And especially when you're talking about very extended parts of the trend, there's just not as much data for that type of move. So people do tend to think about stops, or sort of at what price levels this may just sort of be a take profit type of opportunity. I'd say right now you've definitely could correlate to what we're seeing in the markets right now, that you've seen such extreme trends, particularly for gold and equities. There's some indication that you might want to stop out of those.
She gets an A+. Stop out of it. I'm looking at a point and figure chart. I'm not going to go into this because people are going to drive off the road. But the bottom line is, Katie nailed that. There's not enough observable data when you get an accelerative tendency like what we've seen in gold. Is that enough, Nerd Patrol? Monica Ricks, that was too much, right?
Too much.
Thank you. Okay, Monica says, move on.
Gold at 4,000, right on that support. Katie, what's the most interesting, maybe trend trade you guys are looking at these days?
I mean, I think the interesting part is the fact that I'm nervous about a lot of the trends that we have right now. And the only trend that's sort of developing is this stronger dollar theme. We have seen some interesting themes in the precious metals and base metals. But of course, November has really sort of turned everything upside down. And you've seen a lot of noise in some of the trends that we had pretty high conviction in going into this month. So I'd say, we're kind of trying to determine if the trends we have are deteriorating, or if the new theme is something like a stronger dollar over the next few weeks, and other potential concerns for the trends we have already.
Katie, how about on the interest rate side? We've got a Fed that seemingly is at the beginning of a easing phase in terms of monetary policy. Is there a way for you guys to think about some trades here in a lower interest rate environment?
I mean, I think that's generally the theme that we've seen. The long-term theme has been to be long bonds, obviously expecting rates lower. But more recently, I've been interested in the cross-asset trends that you've seen, where gold kind of pulling back a little bit recently. Also, yields going up a little bit more. You kind of have some concern in the market about that we will get those cuts, but maybe not right away if we don't have the data. So I think that's what we're definitely seeing.
So go cross asset, compare trend dynamics, technical structure of 483 Standard & Poor's 500 versus Mag 5, Mag 6, Mag 7. What's the cross asset tension between the market and the glory stocks of AI?
Well, I think the big tension, I mean, if you look at the S&P 500, roughly 40% is those 10 largest companies. A little bit less, obviously, if you think about the top 7. But you have this massive divergence in terms of the amount of return that you've seen in a small number of stocks, which makes a very narrow rally, which could even make the rally a little bit more susceptible to just the idiosyncratic nature of a 7-stock portfolio. So I think for me, you'll see very big differences between those trends, and you'll be more concerned about a very narrow trend that doesn't represent as diversified of a portfolio.
You want to get one more in here?
Sure, absolutely.
I think
so. Katie, we're pretty much through, I guess, about 90% of the S&P 500 has already reported earnings. We've had some pretty darn good earnings here. How does earnings trends factor into your work?
So, I mean, we definitely look at earnings. Earnings create nice. I mean, you're exactly pointing out that earnings have driven positive price momentum. And we've seen that recently. But now with sort of earnings season kind of coming somewhat to an end and very limited data, it is hard, I think, for the markets to distill without that fundamental data to kind of determine what the valuation of these companies really should be and the backdrop of the U.S. economy and companies as a whole.
Can I ask a rude question? I mean, it's Rude Friday. I mean, Katie, can I ask a rude question?
Go for it.
if you're at MIT, okay, and you got a degree and a PhD in electrical engineering, do you animals look down on the chemies and the mechanical engineers? Is Troy Gayeski like positively 19th century because he's chemical engineering instead of a double E?
I mean, that's a good question. I think we're all sort of a microcosm of like a high school, right? So you got your chemies and your mechies and you have your EEs and, we're all hanging out in maybe different parts of the Muddy right. Charles, I guess.
Nerd lounge.
Katie, thank you so much. This is great. Well, Katy Kaminski, thank you. AlphaSimplex, some really sophisticated stuff for Global Wall Street. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We need to talk to people, not rumor, not innuendo, not the politics of the moment, but just an adult. He's with King Spalding with his public service to the nation. Ryan Majerus joins us right now. All sorts of good work, including Assistant Secretary Enforcement and Compliance at Commerce. What does the media, Ryan, most get wrong about the Supreme Court analysis of tariffs?
Well, great to be with you. And, I would say similar to the great Game 7 we had 2 weeks ago, this is going to have a lot of twists and turns before we hit the end. There's a lot of skepticism that the administration is going to prevail. If I put my betting money on it, I think they will not prevail. But the challengers faced a lot of difficult questions as well, particularly this notion that IEEPA allows you to do all of these things. It allows you to block imports, sanction
right.
folks. So why can't it allow you to adjust imports through tariffs? And I think the challengers got themselves tied up in knots trying to cover that.
We looked at the surveillance Rolodex. Juan keeps his surveillance Rolodex.
Yes.
Do you realize the percentage of people that don't know what I'm talking about?
Juan has no
clue what a Rolodex is. We got out the Rolodex, Ryan, and we said, find someone who's actually read Section 301 or Section 122. Does the president and the administration have a convenient out if they lose at the Supreme Court?
Yes, they do. I think they have multiple options they can consider. So they may consider Section 338, which is from the Smoot-Hawley era. It's never been tested before.
Thank God I read that one.
That'll keep us entertained. I think they're more likely to pivot, as you noted, to Section 301. That was used for the China tariffs. They're very enduring. I mean, we've had China tariffs in place under that law for 8 years. It's very broad. I actually think they'll use a provision, as you noted, Section 122, which is a balance of payments focused law, because it'll allow them to put in place 15% tariffs for 150 days. There's no reason from my perspective they can't do that and at the same time launch a whole bunch of 301 investigations against our trading partners.
Ryan, you spent a little more than 2 years at the U.S. Department of Commerce. Is this tariff policy a sound policy across the board, these tariffs? Is that a sound policy, do you believe?
So, they're trying to hit at some core ideas. Again, they're trying to return manufacturing to the U.S. and deal with persistent unfair trade we've dealt with for decades. We need to reckon with those issues. And that's what they're trying to do. The challenge,
you think there's persistent unfair trade against the United States for decades?
Absolutely. From China, excuse me, we faced unfair dumping, excess capacity, global distortions for decades. And the problem is that issue is
look around our economy versus everybody else in the world, Ryan.
Yeah.
Do you really believe that?
I deeply believe we face these challenges. The problem now, though, is that this may be an overcorrection on the problem, and the stock market and the overall economy is not acting as a check to this. And we'll have to see if that bears out as we go forward.
Wow. All right, Ryan. So where do we go from here? If the Supreme Court does maybe rule a little bit against the U.S. Administration here, how aggressive can the administration be and try to find some other avenues to try to enforce some of these trade policies?
So here's the way I would think about it. A lot of folks may think if the tariffs are struck down, our trading partners who cut deals are going to come to the administration and say, your tariffs were struck down, we want a new deal. I think the administration can credibly come in and say, we have used Section 301 in the past. It's been battle tested in the courts. We've had significant tariffs in place against China for 8 years, and we can do that against you as well. And so I actually think these negotiated deals are probably here to stay. My personal view is, regardless of the result, we're going to see tariffs continue. The big challenge is going to be what happened to folks who paid the tariffs, because we're going to have a big problem there.
Okay, Ryan, we gotta wrap this up, and I want to get you on in the coming weeks, because I just think the balance you're bringing here is great. McKinley did tariffs. The day before he was assassinated, he gave a speech in Buffalo and said I was wrong and pulled away from tariffs. Are we going to get to a point where, whether it's President Trump or the next president, has to go, oops, this is not working?
We certainly could hit that moment. I personally think right now AI is shadowing issues in the economy. And I think, at the end of the day, their hope is they can raise the real median wage of American workers. But if folks are paying more for the goods they need every day, that calculus is going to weigh out. Ryan,
this has been great. Ryan Majerus, thanks for the Friday brief. International trade team at King and Spalding LLP, and of course, his public service to the nation, Office of U.S. Trade Representative. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Joining us now from Course 10 at MIT, Troy Gayeski. I just want to digress here. I mean, it's a lot of fun between Chemi and EE at a place like MIT, Jim Caron out at Caltech, and the others. What was it like your first day in the introduction to chemical? How over your head were you?
Well, Tom, I guess I'm proud enough at this stage of my life to admit that my first chemical engineering class was thermodynamics and fluid mechanics. And literally the first fluid mechanics test, I got an 18 in 18, right? And I studied my rear off for it. And so it was like, holy cow. But the mean was a 31. So I didn't feel like such a loser.
It's just a window into the academics of what Michael Bloomberg and Tom Secundo's brilliant invented here. That story that you just heard, in the day now of grade inflation. Yep. Mm-hmm. I got a D plus.
My man Tom.
I got a D plus in physics under Zemansky in aerospace engineering and Rebecca Struick at Boulder. And my father goes, well, I'm disappointed.
You don't want to let your dad down, right?
It was just unbelievable. Speak of the D plus now, which is the Bear Crew at your shop. The Bear, you got to push against the Bear Crew right now into this weekend. What do you say to them?
Yeah, look, I think fundamentally, you talked about technicals a lot with your electrical engineering guest before. No offense to that discipline, but we're chemies, right, Tom? And your dad was, obviously. But, on the fundamentals right now, it's really a collision course between the tremendous AI spends that are going on, of which NVIDIA and hardware are huge beneficiaries, and the concern over whether those can be sustained by cash flows going forward. So we would think we're in more of a consolidation period, and the trend will reemerge over time. But make no mistake, at this particular point, it's unlikely we have material upside into next week. It's going to take several weeks for consolidation. And then the fundamentals, when NVIDIA's earnings come out, should reassert themselves.
So we're pretty much done with the earnings this cycle. 11, 12% EPS growth.
Not
Pretty
too bad.
solid. Not too bad. Is that enough to support this market?
Paul, this is brilliant. This is the heart of the matter.
Yep.
This is the heart of the matter.
Exactly. So what do you take away from those earnings?
Yeah. So look, I think we came out of Liberation Day and there was a lot of doomsday in the economy, a lot of doomsday on earnings. The AI spends, just to put them in perspective, are going to contribute an additional 50 to 75 basis points to a 30 trillion plus U.S. economy alone. That is a tremendous amount of cash flow coursing through a subset of companies. So it's very unlikely that these historic earnings decline to a more normalized pace anytime soon. And that should continue to power upside. The question is always for investors is, assuming you're not going to put all your capital in 6 or 5 stocks, what else can you do that can compete? Or how can you replace cash and fixed income in your portfolio?
So what are we doing here in terms of trying to maybe diversify our portfolio a little bit? Because I think all of us, whether we like it or not, we're long these big tech stocks in our mutual funds and our 401ks and things like that. And in a portfolio, if you want performance, a portfolio manager needs to be in these names. Is it worth trying to diversify?
Yeah, so I think we all know, even if the world doesn't end, you can go through horrific mark-to-market periods like we did in 22. There can be an exogenous shock. So it's highly unlikely a consultant or a financial advisor will allow a client to be 100% in 5 stocks or just the Qs, for instance. So from a diversification standpoint, what else can you invest in that can compete over time with less volatility? Middle market private equity would be one example. If you're looking to replace cash, but you need liquidity, liquid multi-strategy funds would be another. And then, of course, if you're looking for an income boost as yields continue to drop, private credit, despite all the headlines these days, which you guys promulgate quite aggressively, looks like a place where you can continue to pick up excess yield.
What about, take it bigger and broader here, the idea that people are going, AI, I say to people, AI is sort of like the railroads of the 19th century. There's going to be 1 iteration, 2 iterations, 3 iterations. What's your think of Eric Brynjolfsson up at MIT. What's your x-axis on AI? Are you looking out, don't give me this 1 week quarter the next cover of Barron's. Are you looking at 3 years or 30 years?
I think it's, in different stages, 3, 5, 7, 9, and even further. All right. And if you think of just simplistically bringing it back to market technicals, there's been a lot of bemoaning of market cap concentration, but I don't think we've seen anything yet, right? We're going to be here in 3 or 4 years, and the market cap concentration will become even greater. In terms of productivity enhancement, that still remains the outlying question, right? Is there enough of an ROIC, enough of a productivity boost? But given the ridiculous levels of spends, and assuming that those that are doing it have IQs well over 100, they certainly believe that the productivity enhancement will be worth these record spends.
So outside of, the big tech equity trade, how about in the fixed income space? Are we taking credit risk here in this market, do you think?
Yeah, I think you have to be really careful in liquid credit, right? Tom, credit spreads are near their record tights. After adjusting for defaults, the trailing 12-month default rate in high yields a little under 3%. You're only picking up about 80 to 100 basis points above risk-free. So if you need a yield pickup, you still have that illiquidity premium in private credit. What we're looking in more vanilla fixed income is tied to agency mortgages, where refis will remain low. Over 80% of the country has a mortgage at 6% or below, 70% at 5% or below. Very hard for us to see how you could possibly get that without another QE, right? To kick off another refi boom. And then, other areas we're looking at and have been focused on in liquid markets have been merger arbitrage, where obviously the regulatory regime is much more friendly, yet spreads are at average levels. And then lastly, convertible bond arbitrage, which plays into convexity, Tom, one of your favorite terms. There's a lot of relative value in that market and a tremendous amount of issuance, which continues to drive relative performance. 30
seconds on convexity. Run it over to what MIT's glory is, which is solo growth economics.
Yes.
Simon Johnson with the Nobel Prize here. We have no clue where our productivity structure is right now. Our 3-ratio productivity, we have no idea where we are.
It's very foggy, Tom. You're right. There's expectations of productivity enhancement, but I will say, when you think about the new environment we're in of constrained labor markets, constrained immigration, not a political statement, of course. Whenever you have labor constraints, you tend to get productivity booms and productivity enhancements.
Right.
And relative to the rest of the world, our productivity has been growing far, far faster for far, far longer. even prior to the massive AI investments we've been making.
Okay, I got 18 seconds. Did you tell your parents you got an 18?
I think at that point I was too insecure, but I told them I did very poorly.
I'm going to feature that in Single Best Idea. What a joy, folks, from MIT. Good morning, 92.9 FM in Boston, and he is with Future Standard, Troy Gayeski, our Chief Market Strategist. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
The newspapers. Lisa Mateo, please, what do you have?
All right. When you go to the movies, do you prefer IMAX? That's the question. Do you go to the big
Sometimes,
screens?
absolutely. You know, for like when there's going to be big action or that kind of thing. So.
Exactly. Like when you go see like F1, you know, like the big
Well,
racing
so when
movies.
I saw the Bruce movie last week, and I made a point to go to a Dolby.
I missed this. I was away. What's the review of the Bruce
Excellent.
movie?
Well, I'm a diehard Bruce, so it was excellent for me. I loved it, and and I saw it in the Dolby theater, which is the Dolby Sound, and that was kind of cool. So,
See,
yeah, I will pay up for an IMAX
That's the question. Will you pay up? And apparently, everyone in Hollywood wants their movies on these super-sized screens. The box office has been suffering, right? Fewer hits, more flops. But IMAX says domestic total ticket sales are up only 2.6% this year from 2024. IMAXs are up 16%. Its share of domestic global tickets, record highs. I mean, what is interesting is it's changing movie releases. So, for example, this month's remake, you had The Running Man, right? It was supposed to be released on Friday, today, but Paramount postponed it because they wanted to lock in the IMAX screens because they were taken already by Predator Badlands. So it's starting to change the way movie studios think about releases too on that effect, aside from just, you know, the consumer who's just going to see the movie.
Lucas Shaw has been just nuts on this. He's just been outstanding.
Yep.
He walked through the economics of the sphere in Las Vegas.
Right.
And just showing movies is a way to go there.
Yep.
It is. The Wizard of Oz is killing it over there. It is.
IMAX stock up 35% this year. Pretty good.
See? Not bad.
Next.
Okay. Okay. Were you a fan of Breaking Bad? Did you see the series?
Yes.
You were? Okay.
Yes,
So they had the creator behind it has a new show called Pluribus.
Okay.
And everyone was waiting. It debuted last night, okay, on Apple TV. So much so that it crashed for users.
Wow.
In the US and Canada. The first 2 episodes were released last night after 10 p.m. Wall Street time.
So I got to watch this?
You have apparently so. I mean, 13,000 reports on Down Detector. Apple
I just got
did announce
done
it.
with Slow Horses.
Okay.
It gets better and better.
See, you got to stick with I got to get the Apple TV now. I don't know. But
Mrs. Keene says my socks look like Jackson Lamb's. That was said tersely. So Pluribus.
Yeah, but it's interesting. So what does this say for like future shows, big shows? Is this going to keep happening?
Well, sporting events. I mean, if you put an NFL game
live,
on streaming.
Yep. It happens. You remember the boxing match on Netflix that totally crashed. Sorry. Okay. Want to go to this one now. If you remember the story, Tom, I don't know if you were here about the $10 million gold toilet. Okay. So up for sale at Sotheby's. It's going up for sale on the 18th. There was never any word about who owned it. It was kind of kept secret, but the New York Times sources are telling them it's Mets owner Steve Cohen. He purchased it. I'm not making Mets toilet jokes. Nope, not going there. 18-carat flushable sculpture by Maurizio Catalani. Bought it back in 2017 from an art gallery. So November 18th, it starts at $10 million, the betting.
So if I had the banana behind me with the duct tape, same guy. I got to go get some porcelain wonder from Home Depot and bring it in and put it
Well, here, you mentioned home. Here's a fun fact for you. One of those toilets can buy you 100,000 toilets from Home Depot.
There you go.
News you can use.
30 seconds. One final one. What do you got?
God, that's it. That's all I got for today. I know.
But I like Steve Cohen. I mean, he's just, I don't know what he bought it for, but if he sells it for $10 million, I'm guessing he's going to make a nice profit.
Yeah.
Just like a good hedge fund manager should.
And it does work as a toilet, in case you were just
So maybe he can use that on a reliever. Take the proceeds.
I was going to say, I'm still not over Juan Soto. Diaz, that would be good.
Yeah, that's right. They're going to sign him.
Juan Soto with the Mets is just like un-American. I don't know. I'll have to talk to Mr. Cohen.
The rich get richer. Dodgers.
Thanks for listening to Steve Cohen. You got to come on the show. talk a little baseball here and talk about what you've learned doing this. Lisa Mateo, thank you so much.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.